Okay, Saturday the 21st of October, and we are on the NASDAQ. So one of the new US markets that we're adding to the analysis videos. What I'm going to do is I'm going to post up the US markets on a Saturday, so the S&P and the NASDAQ, and then on the Sunday I'm going to continue to do the FTSE 100 and Australian dollar, US dollar as normal. Now, just before we get started, if you do watch these videos, if you do find the analysis useful and you use it for your trading, please just take literally 2 seconds to hit the like button down below. It lets me know that the videos are being well received, and it also helps the videos get a little bit more traction. Okay, so for the NASDAQ, I'm going to go a little bit more in depth this week because it is the first week. We'll look at the market on a longer term view, and then I'm just going to start doing the regular analysis whereby we look at the market, what happened through the trading week in terms of the analysis that we did the week before, and then we're going to have a look at the market for the trading week ahead. Now, I have to say, with the NASDAQ, I am quite excited to start trading on this market. I've been looking at it in depth for a couple of months, just in anticipation of what US market could be added after you guys put in the votes, and it lines up very, very well with the way that I trade. So I use Zone Trader. My main market that I trade is the FTSE 100. The NASDAQ is very, very similar, and I've been watching it. I've basically been setting up every day and getting ready for the analysis, and then I'm going to bring it into the subscription coming in January, and it behaves in a very similar way to the FTSE. So I'm quite excited to start trading this market on quiet days. For the FTSE, I'll be able to just jump onto the NASDAQ when it opens at 2:30, and hopefully it's going to be useful to you guys also because with the opening hours, 2:30 to 9 p.m. GMT, it means you can use the market after work. Okay, so on the NASDAQ, first thing is long-term uptrend, pretty easy to see. As I said on the S&P video also, when Trump came into office, there was a big expectation the markets would collapse. In fact, the exact opposite has happened, and we have continued to rally. So what we've had on this market recently was a bit of a price squeeze. So it's really sitting right here. And then let's just mark some of the rectangle. It's a little bit easier up into these levels. Now, we did test all the way down here. So you could argue that it's been a relatively large resistance level for the price squeeze, but the main levels for me really are up into here. Now, over the last couple of weeks, we have broken up above that key resistance level and the price squeeze. So what are we looking at coming into the next week and the next couple of weeks? Let me just get rid of this rectangle. Just going to move this a little bit. I'm just looking. We've had a spike up, and a spike up, but really they're looking like false breaks. What we'll do is we'll take it into account for potential support moving forward. So we have broken up above a price squeeze. If we see the pullbacks into what is now potentially support, it becomes a good area to look for continuation. Now, it's also lining up with a couple of swings, so a couple of swing highs in what is an uptrend. So we're in an uptrending market already. We've broken up above that resistance level, pullbacks into support. It's a good level to look for potential bullish positions. Now, if we started to fail at these levels, what we would potentially be seeing is a false breakup, and we would then begin to look for a stronger correction with support levels down at around about 7,900 up toward 7,925. We have another level sitting at around about 7,880 and down into 7,850. You can actually take into account this previous spike down from the 25th of September. So 1, 2, and 3 support levels down below. Now, if we did start to break through this level, as I've mentioned, it becomes a good area to look for resistance, almost like a ladder. If you break through the first rung, you step down onto the next rung. If you break down through this rung, you step down onto the next rung also. At these levels, worthwhile looking for potential support. Now, at present, the market is broken up. It hasn't really made any significant moves as yet. Up toward these previous highs. is acting as resistance. Now, the previous highs on this market are the all-time highs. All-time highs are always worthwhile looking for potential resistance and bearish price action if we are seeing the evidence. Now, the evidence is that on Tuesday, on Wednesday, and on Thursday, and also on Friday, we have rejected off of these levels. So it's telling us that sellers are finding this to be an area worthwhile of stepping into the market. Also, profit taking from people who have held on for this breakup. You can see lots of bulls stepping in on the 5th of October. So there's also profit taking. Now, if we break up above this level, because we have paused here, really actually on Monday the 16th also, we've had 1, 2, 3, 4, 5 days of rejection here. It would then become potential support to look for continuation of this bullish trend. Now down below, we also had this section of price action right here. So what we're seeing is after the strong move up, which is the break of the ascending triangle, the market hesitated. So it wasn't a clean breakup. We didn't see the clean break and then very, very strong bullish continuation. We've seen the market break up and then it paused as both the bulls and the bears fought over this. The bears obviously trying to drag the market back down, turn this into a false break. But the bulls so far have continued to press the market higher. Now, why it's important to us is because it's giving us the evidence that both the bulls and the bears are interested in this area. You can actually see on Wednesday the 18th, the market was forced all the way back down to test at these levels, and then the bulls stepped back in. So really for me, 6050 to 60, we're now at 6070. Also a good level to look for potential support. If we break down below this level, very, very likely we're going to see NASDAQ pulling back to retest these key levels of structure right here. Now for me, these are the main levels of structure moving forward. Now, if we see pullbacks, this is where I'd be most interested to look for that bullish holding and potential stronger bullish movements. And apart from that, that's really everything that I'm looking at on the NASDAQ moving forward at present. Main thing is we are still in an uptrend. However, we have started to see that hesitation up at these levels. Does not mean that the market is not going to continue its bullish rally, but it's giving us the clues that we potentially have a good area to look for those sell positions. Down below, key level of support. Down below, that is a very strong level of support. If we break down below that level, then I'd start to be happier to look for stronger corrections on the NASDAQ. Okay, guys, so as always, I hope that was helpful. Hopefully you all have a good trading week next week. I'm James Orr, and thank you.